module 16. In this class, we're going to look at BTC mining. And under BTC mining, we're going to look at mining difficulties and puzzles, then how BTC is mined. Then we're going to look at different types of mining. And last, we're going to look at halving. And under that, we look at the halving clock, the Bullrun, and the Bullrun catalyst. So let's start. What is Bitcoin mining? But just before we explain what Bitcoin mining is, we look at a simpler analogy of the M-Pesa, or rather how M-Pesa works, so that you can easily correlate that with how Bitcoin mining works. So Bitcoin mining is a fundamental process that secures, number one, secures the Bitcoin network. Number two, it verifies transaction and ensures that new Bitcoins enter the circulation. How many Bitcoin did we say will ever exist in the market? Someone? How many Bitcoin did we say will ever exist in the market? Pius? Okay, let's have Sylvia's slide.
21 million.
Yes, 21 million Bitcoins will exist in the market. And we said, I remember last time we looked at the circulating supply of Bitcoin. Let me just come to CoinMarketCap right here. CoinMarketCap right here. We see how many Bitcoins are in the market already and how many are remaining to be mined. Let's see. Cryptocurrencies. So remember, this is Bitcoin. Remember, I said a crypto aggregator is a platform where you can come and check a coin's metrics. So from this part right here, you'll be able to get the circulating supply of Bitcoin, and you'll see, let it load. Perfect. So the maximum supply, that is what Sly has answered right now, that the total number of Bitcoin that will ever exist, that is the definition of maximum supply, is 21 million Bitcoins. But the total supply represents the current circulating Bitcoins in the market, which is 19.85 Bitcoins. So the number of Bitcoins that are remaining to be released in the market is around 21 minus 19, that's around 2 million Bitcoins. That's the only number that is remaining to be released in the market, because already 19.85 Bitcoin are in circulation at the moment. So, and we are saying, let me just go back to my slides. We are saying that it ensures, Bitcoin mining does four things: secures the Bitcoin network, verifies transactions, and allows new Bitcoin to enter the circulation. However, for many people unfamiliar with blockchain technology, the concept of mining can seem complex, and no wonder we are making it easier or relatable if you understand how M-Pesa works. And M-Pesa, remember, is a centralized system, a centralized financial system, because it is owned and controlled by Safaricom. So M-Pesa is a mobile money transfer used by millions of people, especially in Kenya. It allows users to send, receive, and store money using their mobile phones. So when a person sends money by M-Pesa, the transaction follows these steps. Number one, the sender initiates a transfer request by entering the recipient phone number and the amount. That is from the sender's side. So after doing that, M-Pesa's central system processes that transaction, verifies the sender's balance, and deducts the specified amount. No wonder if you don't have enough money, the M-Pesa to send to that receiver you're sending to, M-Pesa will give you a notification to either Fuliza or that your money is not enough to send that transaction. So number one, once the sender has initiated a transfer request, that signal must go to M-Pesa's central system. Then M-Pesa's central system has to confirm if you have money that you're saying you want to send. And also it has to confirm if the receiver, the number that you've been put there for the receiver, if it actually belongs to M-Pesa before, or rather if the number owns an account with M-Pesa so that they can send that money. So once verified, the system updates both the senders and the recipients' balances. So both parties receive a confirmation message indicating that the transaction has been completed successfully. So this system, the M-Pesa system, relies on Safaricom, a centralized entity, to verify, and approve these transactions. So every time a transfer happens, users trust Safaricom to keep accurate records and prevent fraud. So it's just the same thing. We're saying that the Bitcoin mining ensures what? Ensures security. Just to come back, it ensures security, it verifies transactions, and it allows new Bitcoins to enter into the market. The same thing with M-Pesa, we are seeing it verifies transaction, approved transactions, and lastly, it does what? It keeps accurate records and prevent fraud. So how, in correlation to that, how does Bitcoin work now in a decentralized approach? So unlike M-Pesa, Bitcoin transactions are decentralized, meaning there is no single company or entity like Safaricom that is controlling what? That system. So instead, transactions are verified by a network of independent computers called miners. So we can say that miners are what? Miners are a group of people or a group of network that do what? They verify these Bitcoin transactions. So how Bitcoin transactions are processed? Let's look at how they are processed. So a Bitcoin user initiates a transaction by sending Bitcoin to another user. So this transaction is done what? It is broadcasted. Remember, this is decentralized, so it would be broadcasted to Safaricom like we've seen in the case of M-Pesa. But rather, because this is decentralized, it will be broadcasted to a Bitcoin network where it is grouped with other pending transactions into what? Into a block. So the miners, remember what you said about the miners? The people that validate these transactions are what we are calling the miners. So the miners will compete to solve a complex mathematical puzzle to validate that block. So the first miner to solve the puzzle announces the solution to the rest of the network. So other miners verify the correctness of the solution, and if valid, the block is added to what? The blockchain. And remember, we said that the blockchain is a public ledger of all Bitcoin transactions. So the winning miner, the one that has solved that mathematical puzzle the first, is the one who will be rewarded with newly created Bitcoin plus transaction fees. So I remember when you're talking about staking, we talked about consensus mechanism. Which two types of consensus mechanism did we talk about? Someone. Two types. We said it depends on two things: the staking power and the completion of the mathematical puzzle. Joseph?
Proof of work and proof of stake.
So Joseph, still on the same. Yeah, correct. That's correct. Proof of work and proof of stake on the same, according to what you've just described right now. Do you think it falls under proof of stake or proof of work? And give a reason why.
Proof of work. Somebody needs to solve mathematical puzzles in order to be awarded some Bitcoins.
Yes, let's appreciate Joseph. Perfect. Yes. Remember, I said in proof of stake, the power, or rather the amount of cryptocurrencies that you've committed to your stake, or rather you've committed as collateral to stake, will determine the number of cryptocurrencies you'll be rewarded with. But in proof of work, it completely relies on the first person to solve that mathematical puzzle. And the correct term of this mathematical puzzle is actually called a hash puzzle. But remember, I said I don't want us to dive deep into all this. I just want you guys to understand an overall understanding of how Bitcoin mining works. But if you want to understand in depth about hash puzzle, know the nonce, the hash function, the difficulty target, all that, just like I always say, just come to Kenya Crypto Magazine's website right here. Then under this part, remember there's a cryptocurrency course right here. Then there's a Web3 course. So if you come to Web3 course, topic 15, you'll understand different blockchain mechanisms, consensus mechanism, and we talked about proof of work and proof of stake. But as you see, there's a lot of other different consensus mechanism, delegated, the proof of authority, which we did not mention in class, but we talked about the main two types, proof of work and proof of stake. Also, if you want to understand how the cryptographic puzzle and the difficulty target works, the cryptographic puzzle is whatever we are talking about in the proof of work, where you need to solve that cryptographic puzzle the first for you to be awarded with Bitcoins. If you want to understand that, it is on lesson 16. Just to go back, so the winning miner, like you said, is awarded with newly Bitcoins plus the transaction fees from the included transactions. So the miner who did this will be awarded with what? Bitcoins. So unlike M-Pesa, where Safaricom has complete control over approvals, Bitcoin transactions are verified by a decentralized network of miners. So this eliminates the need for central authority and ensures no single entity can manipulate the system. So every time you send a Bitcoin, you'll see that your transaction will be validated by a couple of guys. You'll see validation, maybe 5, 10, 20 people, 200 people, 2,000 people. These are just other, these are what you're calling the miners. But the first miner who actually announces that solution is the one that will be paid. The rest of the validators are there just to ensure security. They just validated that transaction, so they ensure the security of the blockchain. So let's now understand Bitcoin mining in detail. Any question up to that part before I continue? Any question? If everything is okay, thumbs up. Sylvia, I see your hand is up. You have a question?
I'm sorry, it is a long hand, sorry.
Okay, Joseph?
Can we get an instance where somebody has the machines of mining BTC but does not get the rewards?
Yes, it depends. Remember, we said the one who solves this cryptographic puzzle is the one that will be rewarded. So you might get lucky. It depends on it totally. It doesn't mean when I say cryptographic puzzle, it doesn't mean someone is seated somewhere and doing all the maths. The machine will do all that for you, and we'll look at that. But I won't dive deep into that. But just to explain, the machine will solve that cryptographic puzzle for you, and the person with the fastest machine depends on a lot of things: the power, the network. The fastest machine will be able to solve that cryptographic puzzle and get those rewards. So it totally depends on the strength of your ASIC. They're called that, yeah. ASIC something, ASIC machines. Is that okay, Joseph?
Okay, thank you.
Okay, just to continue, Bitcoin mining in detail. So what is Bitcoin mining? Just like what you said, is the process of verifying Bitcoin transaction and adding them to the blockchain. So it plays a crucial role in maintaining, number one, the security and the integrity of the Bitcoin network. So who can tell us how miners ensure security and integrity of the Bitcoin network? Someone? How do they ensure the security and integrity? Mainly the security and integrity of the Bitcoin network. I guess. Pius?
By validating the transactions.
So how do they ensure the security? Pius?
I'm not sure which.
Okay, good try, but you're quite on track. Joseph?
there is a minimum number of blocks that a transaction needs to pass in order for it to be complete. So it
Yes,
verifies the transactions.
yes, but just to explain in a very simple way for you to understand, remember we said that Bitcoin transaction, if anyone has ever transacted Bitcoin or any other crypto, you'll see before the money getting to the, or rather the crypto getting to the other party or the receiver, uh, there are a number of validators that must check that transaction. So you'll see a transaction has maybe 2,000 in something transaction. I'll send a screenshot in the group for a Bitcoin transaction. You'll see 2,000 confirmations have been made. So imagine if you want to reverse that money, it means you have to consult all these 2,000 people, consult them to invalidate that transaction. And logically, that is very impossible. Even if it was possible, where will you get all these people and their contacts? So it will be very impossible. And thus, it maintains security and integrity of the Bitcoin network. So mining serves two primary functions. Number one, transaction validation. Miners ensure that only legitimate transactions are added to the blockchain. Then number two, new Bitcoin creation. So miners receive Bitcoin rewards, introducing new coins into circulation. So just a random question, but at the end of this class, you'll understand. We'll get back to this. So as of today, how many Bitcoins are released into the market? We'll get back to that and we'll be able to answer. So how does Bitcoin mining work? We've said it involves solving complex cryptographic puzzles through a process known as proof of work. And that is what Joseph had just described, proof of work. This system ensures that miners must perform computational work before they can add new transactions to the block. So the process follows these steps. Number one, it gathers the transaction. Miners collect pending Bitcoin transaction and group them into a new block. You'll be able to understand what blocks are if you go through that Web3 course that I've just mentioned. But for the purpose of this, I just need to understand that a group of transactions is what we call a block. So after they've collected those pending Bitcoin transactions, the next step is solving that puzzle. Each block contains a mathematical puzzle that miners must solve using specialized computers. In this case, for the for the BTC mining, you need the ASIC machine. That is what we are saying, specialized computers. Number four, finding a solution. So miners continuously try to find solution until until one of them finds the correct answer. And the one that has found the correct answer must broadcast the solution to the other network of miners. So after broadcasting, then we go to the last step, which is verification and block addition. Other miners check the solution. If it is valid, the block is added to a blockchain and the winning miner receives that Bitcoin reward. So the system ensures that Bitcoin remains secure and decentralized, thus preventing fraudulent transaction or double spending. So before you even continue, I just want to share some videos I got on YouTube about how Bitcoin mining actually looks like. This is a farm. It's a farm in Kenya where Bitcoin mining works. So I want us to. You can.
This is Bitcoin mining in Kenya. That is
send a link into the group for you guys to see. So thumbs up if you can.
link here. This is the infrastructure, the containers where you have to set up the miners. These containers are carrying up to about 160.
Okay, let me just share a link. Then once I'll send it to the group. Once you've watched it, that I think it's a 2 minutes video. Once you've watched it, kindly you'll send a one in the chat so that you can proceed. Okay, let me send it away. I've sent, you can check. So once you're done watching, kindly you'll send a thumbs up. But for the purposes of recording this class, let me...
This is Bitcoin mining in Kenya. That is Starlink here. This is the infrastructure, the containers where you have to set up the miners. These containers carry up to about 162 miners, and each miner consumes about 3.4 to 3.6 kilowatts, and the hash rate for each miner is 80 terahash. And looking at this facility, we have what we call a distribution cabinet. This is how it looks. This is where we have the setup. This is what we call the super brick. We have grid OS in it. That is just regulate the electricity being used by the miners and the community. So if you are thinking about Bitcoin mining, and this is in Kenya, guys, you have to consider all this, right? This is the actual Bitcoin mining.
Where the power is being generated, where we have the turbines, so that you can see. So if you are doing Bitcoin mining, just means not like a small activity you do, but this is
Bitcoin mining is all about the things, the mining devices, which are the ASICs and power. So this is where the difference of power is happening.
Stop using ChatGPT like everyone else and do this instead. To the men.
If you're finished watching the video, you can send a 1 in the chat, kindly. Okay, you can see, yeah. You can send either in the meeting or in the WhatsApp. Okay, I'll also share a second one so you can see someone was mining Bitcoin in 2017, if I'm not wrong. You can only imagine where they are right now. But they were doing it small scale in the house, so let me just share that also. Then after you're done, kindly thumbs up. I've just shared it. Kindly watch that also. Then once done, you can be able to now discuss it. 7 years ago.
It was last year when I stumbled on into Bitcoin. Just like anybody else, I didn't understand why. What was the craze? What was the hype? Here I was like, oh, this is a business opportunity for me. I had to import everything because these parts you can find them here in Kenya. That's the problem. This is only for around $7,000. I've been able to try and configure it where if the electricity goes down and comes back up, it will switch itself on and carry on the work. Probably a third of that or a quarter of that goes to electricity. So that's between $150 to $180 of electricity, which is like a huge sum here. I believe what cryptocurrency stands for. I think it's worth it. And then if I can make money from it, which I am, why not?
Umezuia umetuma same video.
Okay, sorry. Double check the last link that I've sent in the group. That's the link for that small, I won't call it small scale miner because it's also a miner, but yeah. Then once done, you can send a 1 in the chats. If you are done, thumbs up in the meeting. You can see some people are sending in confirmations. Okay, perfect. So that is basically how Bitcoin mining works. And as we have seen, that is a very expensive endeavor. So for you to be able to do Bitcoin mining, number one, you require those devices, and not even one, but a couple of them. And we are seeing they are called the ASIC Bitcoin mining machines. So an ASIC is basically an application specific integrated circuit miner is a super powerful machine built only to mine Bitcoin. It works much faster and uses less power compared to normal computers or the GPUs. So its mining speed is that and terahashes per second. Remember, we said the hash puzzle is the cryptographic puzzle that is supposed to be solved for you to be considered getting the reward of the bitcoins. Then the power usage, you'll see that. So you'll also notice that for you to do Bitcoin mining, you'll also require a lot of power. Then the price of that one machine as of April 2025 is how much? Around something between 350,000 to 550,000. Remember, it depends on the supplier, the condition, and also the shipping fee. So by the time you're shipping this, maybe it will be around 1 million and something. So it's a very expensive endeavor. So do not forget, you'll also need cooling. You've seen from that Kenyan one that they are using the water as their coolant. So you need cooling. Number two, you need a stable internet connection. And number three, a lot of electricity to run. So I always see people get scammed. Give me your money. I'll mine Bitcoin for you, then give you reward. So from now or henceforth, you can now understand how Bitcoin mining works, and you'll know that is automatically a scam. So no one is mining for you Bitcoin from their phone. You need all these things: power. You'll need internet connection. You'll need this ASIC Bitcoin mining machines. Not even one, but a number of them. So having understood how Bitcoin mining works, let's now look at the different types of mining. Number one, we have the proof of work, and we've discussed that. This is normal mining with machines. You buy powerful computers that work hard all day solving those cryptographic puzzles. So when they solve one, you earn some crypto as a reward. So an example of a crypto that is mined using proof of work is Bitcoin, like we've seen. Number two, we have the cloud mining. So in cloud mining, you pay a company to do mining for you. They have the machines, you just invest a little and earn some of the reward. So example of this sites is the Genesis mining. We can look at that briefly, but we won't dive deep into that. This is something you can do on your own. So the Genesis mining is an example of cloud mining. Genesis mining, exactly. So the Genesis mining is just a platform where they have those machines. Your work is only to commit, to pay for them to do their mining, and once they receive their rewards, you'll be able to share with them. Let it load. As it loads, we'll look at that. Number three, we have mining with your normal computer, which is CPU mining. You use your regular laptop or desktop to mine. It's not as strong, so it makes very little money, but it still works for some small coins. Coins like Monero can be mined using this way. So number four type of mining is what we call mining with graphic cards, the GPU mining. So this is stronger than using your normal computer. People use gaming PCs with strong graphic cards to mine faster. So example of coins that can be mined like this is Ethereum, but used to mine Ethereum before. Nowadays, Ethereum works on proof of stake, not proof of work. But yeah, before, when it was on proof of work, you'll do that in a process known as GPU mining. Number five, we have the super machines, like that one for Bitcoin mining, the ASIC mining. These are special machines only made for mining. They do not do anything else. They just mine, and they mine really fast. Example, mostly used to mine Bitcoin. Then lastly, we have what you call the phone mining. I'm very sure everyone is interacted with these. So some apps let you mine crypto on your phone. So it doesn't really earn much, but it's fun to try. So an example of a coin that was mined using the phone mining is what you call the Pi network. Yeah. So let's see if it actually loaded. So yes, start Bitcoin mining today. So they have the ASIC machines. What you do is commit money here. Then after they get their rewards, you'll be able to share those rewards. So this is what we call the cloud mining. Any question on mining before we move to Bitcoin halving? Any question? If everything is clear to that part, thumbs up. If you have understood everything up to that part, if someone asks you what Bitcoin mining is, you can describe it with ease. Thumbs up. Only Pius and Joseph. Okay, perfect. Thomas, you have a question?
No, I was just contemplating on the evolution of cryptocurrency in terms of infrastructure, because the fact that somebody is setting up hardware for those crypto puzzling and computations, is exactly how the previous technology has been. Before, we have now settled on the cloud platform portfolio services. And then secondly, I mean, you are testifying by the costs and the challenges of overhead. Secondly, the second point I was is that one of the other factors that affects a lot of hosting services like this is the fact that in some geolocations, we are now coming out of very limited network, one, availability, second, performance, and and basically stability, especially in Africa. Fiber optic is basically in Kenya now obvious, but it's not all over. Some parts, many parts of Asia also, Central America, Europe and the Northern Hemisphere, it's not a problem. So some of these are the factors actually. And of course the third one is electricity. You can see you have to generate electricity plus many other factors. So I'm just wondering how it will be, because the trend now is cloud services. So the option that we have about cloud may be the one that is most efficient. Just a comment.
Yes. The one that is easily to do will be cloud mining, because it's the simplest. You don't need to submit a lot of things. But remember, even with cloud mining, because there's that window of cloud mining, now scammers have a lot of access to that. So before you participate in anything cloud mining, please do your own research and verify if it is actually a legit mining option for you. Let's appreciate Thomas for those remarks kindly. Perfect. Let's look at the last part of this class, which is the Bitcoin halving. Who can give us a guess, or rather, who can tell us, apart from Bitcoin, which other coin undergoes halving? Someone, which other coin undergoes halving? We mentioned this some time back when we were talking about coin banning. Joseph?
Litecoin.
Yes, Litecoin. So just to remind you guys, we said to reduce supply of cryptocurrencies in the market, they either undergo halving or they'll undergo coin banning. That is just a by the way. So let's look at halving, Bitcoin halving. So Bitcoin was designed with the fixed, remember Sly has told us right now, as we're starting this class, with the fixed supply of 21 million Bitcoins, making it a deflationary asset. What did we say is the definition of deflationary? Deflationary, someone? There's inflationary and there's deflationary. We mentioned this. Definition of inflationary and deflationary. Okari?
Deflationary have a fixed supply, inflationary doesn't have a fixed supply.
Okay, good trial, but not quite there. Good trial, but not quite there. Let's have another trial. Okay, just let me help you. Inflation, we said, Joseph, you want to counter that, what you've said?
However, does it mean the purchasing power increases with time?
Yes. Yeah, now you can say it. What is the meaning of inflationary?
In inflationary, the purchasing power decreases with time. Deflationary, the purchasing power increases with time.
Let's appreciate Joseph. That's on point. So deflationary means the purchasing power increases with time, but inflationary means the purchasing power decreases with time. And I'll give an example. We say that the fiat currencies are inflationary, meaning their purchasing power decreases with time. 100 bob in 2006 would have bought maybe a loaf of bread, milk, and sugar. But right now, 100 bob can only buy what? A loaf of bread. No wonder you said it is inflationary. The purchasing power decreases with time. But deflationary means the purchasing power increases with time. One Bitcoin in 2009 was around $1. It could barely have bought you 2 loaves of bread. But right now, one Bitcoin can buy you a house, can buy you a car, and all that. So the purchasing power increases with time. So it was designed to have 21 million Bitcoins. So it's a fixed supply. Fixed supply makes it a deflationary asset because there's no more production of these assets. Remember, in the fiat currencies, they can always print this money. But with Bitcoin, only a fixed supply, making it a deflationary asset. So one of the key mechanisms controlling Bitcoin supply is the halving event. So we have how many Bitcoins? 21 million Bitcoins, but they were not released to the market at once. They get released day by day, a small quantity through a process we are calling the halving event. So Bitcoin supply, one of the key mechanisms controlling Bitcoin supply is the halving event, which occurs approximately after every 4 years or after every 210,000 blocks. So after every 210 blocks have been added by the miners to the blockchain. Remember what we said? The process of mining, the miners will collect transactions. A group of transactions will be a block. They'll confirm this block, then send it to the blockchain. So after 210,000 blocks have been verified by these miners, then Bitcoin halving occurs. And in most cases, the 210,000 blocks confirmation will end after 4 years. So each halving event reduces the mining reward by 50%. So what are we talking about mining reward? Remember I said that a miner has solved that cryptographic puzzle, they get rewarded by Bitcoin. So if, for example, last year, they get rewarded 100 Bitcoins, then the halving event occurs this year. It means that after every transaction, after every puzzle that they have solved, they now be rewarded with 50 Bitcoins, half. No wonder we are saying each halving event reduces the mining reward by 50%, making Bitcoin scarcer over time. So this reduction in supply often triggers price by increasing it. And I gave a very simple example. I said, when you reduce the supply of something and the demand remains the same, then and the demand is high, then it means what? The price will go up. And I gave an example of avocados. So if you are off season for avocados, it means the supply of avocados in the market is less. But remember, the demand is high. So this is why avocados, when it is off season for avocados, the price of avocados is very high. But the inverse is also the same. If we are in season of avocados, then it means the supply of avocados in the market is so high, it meets the demand. So the price of that avocado will go down. And that is what we're talking about. So the reduction of supply of Bitcoin in the market is what now makes Bitcoin prices to go up. So let's look at the history of Bitcoin halving events. So since the launch in 2009, there have been 3 halving events. And the fourth one, in this case, we're going to say there have been 4, because the last halving event occurred in April 2024. So there have been 4 halving events. And the last one was when? In April 2024. So this is the breakdown. So the first halving, the block number was, remember we said that the system, or rather the code, the Bitcoin code was created that after every 210 blocks, halving event occurs. So the first one was from 0 to 210. So the first 210 blockchain, the reward ratio before was 50 Bitcoins. So from 0 to 210 blocks, every miner that solved that cryptographic puzzle was rewarded by how many Bitcoins? 50 Bitcoins. But after November 28, 2012, that is the 4th year, then the reward was halved. Like we've said, after every halving event, the mining reward is halved by 50%. So after November 28, 2012, the miners were rewarded with how many Bitcoins? 25 Bitcoins. The second halving, remember we said after 210 blocks, which is approximately after every 4 years. So the next 210 blocks was 420. Remember 210 multiplied by 2, 420. The last award was 25 blocks. But after July 9th, 2016, you can see it's approximately 4 years, 2012 to 2016, 4 years. So after July 9th, 2016, the reward was reduced by 50% to 12.5 Bitcoin. The third one 630. Reward before was 12.5, so half of that, 6.25 bitcoins, which happened in after May 11, 2020. Then you're having the fourth, which was 640, 6.25 bitcoins, but after April, exactly after April, now this stands for now currently what the miners are getting paid for verifying this transaction is 3.125 bitcoins. So Bitcoin halving and daily release over. So Bitcoin rewards are distributed approximately after every 10 minutes, meaning miners receive new Bitcoins every time a block is added to the blockchain. So since each halving event cuts the block reward by 50, the number of Bitcoins released per day also reduces significantly. So before halving, miners collectively mine a certain amount of Bitcoin daily based on the block reward per day. So let's look at the number of Bitcoins that get released. So so two things we should understand about Bitcoin halving. Number one, the reward that the Bitcoiners, not the Bitcoiners, the reward that the miners receive gets halved. And currently, as you're talking right now, Bitcoin halving happened in April 2024. So the current number of Bitcoins that miners get rewarded after solving these cryptographic puzzles is what? 3.125 Bitcoins. But in the same breath, the second thing you should understand about halving, the number of Bitcoins that get released in the market daily will also be halved. And that is what we are looking at right now. So from the Genesis block, the reward Bitcoin was 50. We've looked at that. What the Bitcoin miners were rewarded for solving those cryptographic puzzles was 50 Bitcoins. But the BTC rewarded per day, or rather released per day, remember, we've said that the number of Bitcoins that can exist in the market is 21 million, but they were not released all at once. They get released kidogo kidogo per day. So in 2009, the number of BTC that was released per day was what? 7,200 Bitcoins per day. But after halving, apart from the reward to the miners getting halved to 25, also the number of Bitcoins released per day is also halved to 3,600, from 7,200 to 36. The next halving in 2016, apart from the rewards getting halved to 12.5, also the number of Bitcoins released in the market daily was halved to what? 1,800. The same for the third halving, 6.25 Bitcoins, but the number of Bitcoins released was halved from 1,800 to 900. And the last one, which happened in 2024, was 3.125. It was halved, the rewards were halved, but also the number of Bitcoins released in the market was also halved to 450 Bitcoins in the market. And if you were to do a sum of all this, you see the first time the number of Bitcoins that were released in that year, after 4 years, I mean, because it's after every 4 years, the halving event, was 10 million. And if you sum up all this, you'll see it's 20 point something. And no wonder when you come to CoinMarketCap, you can see that the number of Bitcoins that have remained to be released in the market is about 2 million. But there's a 8.5, but around 21 million minus 19.85. How many people are we in the world? Someone? So that you can understand how the price of Bitcoin goes up, or otherwise it's deflationary. Joseph?
8 billion.
Yes, approximately 8 billion. But the number of Bitcoins in the market is 21. So we are having a situation where we are having a scenario where the supply is lower than the demand of this Bitcoin asset. So when the supply of even in normal business knowledge, if supply is lower than the demand, the price will automatically go up. And on top of that, remember that the supply of these bitcoins is also controlled, like you've seen. Every time it gets halved, so Bitcoin becomes scarce and scarce after every 4 years. Started 7,200, 36, 1,800, 900, 450. It is scarce by the day. So by the fact that the supply is controlled, unlike fiat currencies where we can always print money, then this ensures BTC becomes a deflationary asset. Deflationary to mean the purchasing power increases with time. So this is basically an explanation of what I've just explained. So in conclusion, Bitcoin halving creates a supply shock. Like I've said, the supply decreases with time. So historically, leading to price surges. A surge means the price goes up as fewer new coins enter into the circulation where demand grows. That's what I've said, that the supply becomes low, but the demand is high. So the price goes up. So this is what we have basically explained. When the first Bitcoin mining happened, the block number, the mining reward reduced from 50 to 25, and the BTC released in the market was 3,600. This is what you've just discussed from this part right here. So I'll jump these 2 slides. The latest one, maybe you can discuss the latest one. So the latest one, a question. How many Bitcoins were released? Remember, the latest Bitcoin halving was April 20th, 2024. So, April 20, 2024. So, how many Bitcoins were released or were getting released or were released on the date April 19th, 2024? How many Bitcoins were released? April 20th, 2024. How many Bitcoins were released? A day just before halving. Thomas?
420?
No. I'll just navigate to this. You can steal from this part. No. Remember that the halving happened on 20th April 2024. So how many Bitcoins were released into the market on the date 19th April 2024? Joseph?
900.
Yes, 900. Let me just explain so that Thomas and the rest can understand. Remember, we said that the Bitcoin halving happens after 4 years. And in this case, the last one was in 2020. So the next Bitcoin halving was in 2024. So any other date between 2020 and 2024, the number of Bitcoins that were released in the market was 900 Bitcoins. But after halving, now the number of Bitcoins getting released will be halved from 900 Bitcoins to 450. Now coming to that question, you have said that the halving date for 2024 was 20th. So it's only after 20th will now the supply of Bitcoin get halved from 900 Bitcoins per day to 450 Bitcoins per day. So any other date that is behind 20th April 2024, the number of Bitcoins that were getting released remains to be 900. Is that okay, Thomas? Okay, perfect. Joseph, you have a question?
Is the 3.125 the number of Bitcoins per block or per what?
Yeah, the reward. Remember, I've said 2 things you should understand about Bitcoin halving. Is the reward and the number of Bitcoins released in the market. So let me just use this example. From 2024, from 2020, let me go back to this. From 2020, the previous halving event was in 2020, before this latest one in 2024. So in 2020, every miner that solved that cryptographic puzzle was rewarded with 6.25 Bitcoins per every block that they verify. Per every block they verify, or rather they win that cryptographic puzzle, they'll get rewarded 2.25 Bitcoins. But in this 6.25 Bitcoins right here. But in the same breath, the number of Bitcoins that will be released in the market that day is 900. But after 20th April 2024, which was the latest Bitcoin halving, then what happened? It got halved. So the number of Bitcoins that miners will be rewarded for solving that cryptographic puzzle now reduced to 3.125 Bitcoins per block that they verify. But in the same breath, the number of Bitcoin released per day was halved from 900 to 450. Is that okay, Okari? Is that okay?
Yes, it's okay. It's okay.
Okay, Thomas, you have a question. I can see your hand is up.
Yeah, this is quite clear. Then is it okay to say the following one, that after the last halving, which is 4th of April 2024, of course the number of BTCs released per day is 450, and we are almost at the threshold of the maximum supply.
Yeah.
Meaning that there will be no more halving, of course, no more payments to miners, and therefore the question is, what happens? Second question or comment is that, will that then mean that that maximum supply, which becomes scarce, will be traded by the holders and sellers, and that may give rise to other cryptocurrencies being also utilized and maximized in the market, because Bitcoin has locked in terms of the maximum they can ever have? I'm just wondering. Over.
So, okay, have you ever seen a tweet on Twitter, people saying that Bitcoin price getting to $1 million per Bitcoin is as sure as death? And this, I'll explain this. This is because, remember now, the current Bitcoin released per day is 450. So after the next halving, 2024, 25, 26, 27, 2028, we'll have the next Bitcoin halving. This means now the number of Bitcoins that will be released in the market is 450 divided by 2. So after that, then we'll have that until all the existing, or rather the maximum supply of Bitcoin is in the market, which is 21 million Bitcoins. So what happens after this? All the number of Bitcoins will be in the market. Now we'll be having 21 million Bitcoins in the market versus what? 8 billion people. Meaning now for you to acquire Bitcoin, you need to buy from someone else, because at some point they remember Bitcoin is a mode of transaction, so they'll need to liquidate this maybe when buying a car and whatever. So the only way you'll be able to acquire Bitcoin is from someone else. And I'm very sure there are some people who are stacking up Bitcoin as generational wealth. So it will be very scarce. It will be a very scarce commodity, and that will influence the price of Bitcoin going up. Have I answered you? I hope I've explained that in the easiest way. So after everything, after all the Bitcoins have been released in the market, the halving will come to an end. Bitcoin halving will come to an end. I hope I've answered you now.
Yes, that's very clear.
Okay. Perfect. I've said we jump this part. Joseph, you have a question?
Not question, but I think that if Bitcoin halving comes to the end, then the miners will only depend on the transaction or the gas fees only.
Yes. The only way now they'll depend on is the transaction fees. Remember, they get rewarded with new Bitcoins. We talked about that. Once they've solved that cryptographic puzzle, they get paid, number one, with new Bitcoins, and number two, from the transaction fees. So after the Bitcoin halving comes to an end, or rather all the Bitcoins have been released into the market, then they'll only be depending on the transaction fees. Is that okay? Perfect. So I think this we've already done. Let's look at why Bitcoin halving is very important. Number one, it reduces inflation. We've talked about that. So unlike fiat currencies, Bitcoin has a fixed supply of 21 million coins. So halving ensures that new Bitcoin enters circulation at a slower rate. And at a slower rate means what? You controlling the supply, and thus preventing inflation and making Bitcoin a deflationary asset. Number two, it increases scarcity. And you have seen that because after every halving, the number of Bitcoins that get released per day is reduced. So it increases the scarcity. After every halving, the number of new Bitcoins available, or rather get released into the market, drops, making BTC harder to obtain. And this increases the demand and drives the price up. Number three, it encourages long-term holding. Many investors and traders accumulate BTC before halving, expecting a price surge. And this reduces the selling pressure, further supporting the price increase. Remember, a price of cryptocurrency goes down because many people are selling. So if people are holding into that asset, the price will go up. Because they're not selling, the price will go up. Then number four, we have it drives the market cycles and the bullrun. So each halving event has historically been followed by a Bitcoin bullrun, and that is self-explanatory from this point. We can understand why we get a bullrun after halving. Why? Because the supply has been reduced. The supply has been reduced. The demand is still high. Then what happens? The Bitcoin price will go up. Bitcoin bullrun. Then the reduced supply coupled with increased demand, that is basically what I've explained. The reduced supply coupled up with increased demand creates a perfect storm for price appreciation, or price going up, or what other people call the price surge. Then you have what you call a halving clock. This is basically a clock to tell you when the next Bitcoin halving is expected to happen. Halving clock. Let's see when the next Bitcoin halving is expected. Halving clock. Countdown. Different websites will have it. So the next halving is expected to be in 2028, and you can see the date from here. You can use any website. You can just use any website. I don't know. Okay, yeah. This is the countdown. So the estimated halving date will be in March 27, 2028, and that is after 210,000 blocks have been added into the blockchain. So that's the expected halving date. Just to come back here to the slides. So let's look, because you've mentioned a bullrun, let's look at what a bullrun is. What is a bullrun? A bullrun is a period where crypto prices rise rapidly for an extended time, usually across the entire market. So in crypto, it is also an event that happens after 4 years, fueled by what? The BTC halving. And you'll see why the Bitcoin price will surge after halving, because the supply goes down. And also remember that BTC is the king. So everything that happens to BTC, these other coins will follow suit. So if BTC is surging up, is going up, you'll notice that all other coins, and we call them the altcoins. Any other coin that is not Bitcoin is called an altcoin. The altcoins will follow suit. So this will influence, the Bitcoin halving will influence the general market going up. And no wonder you will see in Twitter people saying 2025 is a bull market. You are expecting a bull run. Now you understand why 2025 is a bull market. So mostly a bull run happens 1 year after Bitcoin halving, so that the effect of the scarce supply of Bitcoin can be felt, will be felt, or the scarce. Remember, we said after halving, the number of Bitcoin that will be released in the market will be halved. So that scarcity normally is felt after 1 year, and no wonder the bull run mostly happens, or rather historically has happened an year after Bitcoin halving. So in 2020, Bitcoin halving happened in 2020. A bull run was witnessed in 2021, where Bitcoin then from 700,000 USD to around 68, if I'm not wrong, or 64,000 per Bitcoin. So that's the same thing. No wonder people are saying that because we are having 2024 where we had what? We had Bitcoin halving, then 2025 we expect a bullrun, and already we can say we're in a bull market because let me go back here. The price of Bitcoin before, let's go through this. So the first Bitcoin halving was November 28, 2022. The price before halving was how many dollars? This is historical data. The price before halving was $12, but after halving was $100,000, approximately $1,000. So the second Bitcoin halving, the price before halving was 650K. But 1 year after halving, you can see all of them are 1 year. 1 year after halving, Bitcoin shot up from 650 to 20,000K. That's the second one. Let's look at the third one. The third one, the price before halving was 85K, $85,000. But 1 year, this is in 2020, the last one. After 2020, I was actually wrong, not 68, but 69. So 1 year in 2021, after the halving, it shot up from 85K to what? $69,000. So let's look at the price of Bitcoin before halving in 2024. So in 2024, the price of Bitcoin before halving was 45,000. And currently, we are seeing that Bitcoin is trading at what? It was actually 100,000 just in deck 25th, but currently you can see that it has shot up from 45,000 to around what? 90K. Where is it? The current market price of Bitcoin is what? $93,000. So we are still in a bull market, and you're still early because you can see 85,000 to 69. So you're still expecting 45 to 90. That's a 2x. You're expecting more. So no wonder you're seeing people saying that Bitcoin, the bull run is in 2025. So we've looked at what a bull run is. So let's look at the characteristics of a bull run. So high investor confidence or adoption. You have seen that adoption, a lot of adoption. Then surge in trading volume. The volumes have considerably been going up. Then fear of missing out, because people are fearing to miss out on these high returns. Then they'll FOMO in and bring a lot of money into the crypto market. Then widespread of media attention. So the day you see all your friends texting you, telling you about, advise me on a coin to buy, and you're seeing all the news talking about Bitcoin is trending on Twitter and all that, know that you are in a bull market. So key catalyst of the 2025 bull run, this current one, the catalyst, apart from, remember you said the main catalyst for bull run is Bitcoin halving, but you also have other catalysts for the bull run. Number one, Bitcoin ETF adoption, US and globally. So what do we mean by ETFs? ETFs is basically, instead of buying Bitcoin from exchanges and all that, a company, in simpler terms, is like how you buy shares. So a company will buy a lot of Bitcoins. For example, like Michael Saylor's company is called what? MicroStrategy. So MicroStrategy will buy a lot of Bitcoins. Then they'll open their company up into people, and the people can now buy small Bitcoins from them. Just like it happens the way you buy shares from a company. So Bitcoin ETFs adoption is also influencing the price, or rather it's one of the catalysts for the 2025 bull run. Number two, you have the Ethereum and BTC ETF momentum. That's the same thing, the Ethereum momentum. So you don't need to open a crypto wallet or worry about private keys. You can just buy Bitcoin stock in brackets through your normal stock broker, just like you buy shares from what? From Safaricom. So an ETF is a Bitcoin ETF or an Ethereum BTF. It's like Bitcoin is now being sold in official shops instead of back streets, and everyone now feels safer shopping there. Remember, there's some guys, older guys, maybe millennials and the other ones, they will feel safer buying under a company. No wonder we are saying the ETFs are a catalyst of the Bullrun. There are people, a large majority will accept Bitcoin, or rather will accept to own Bitcoin if they buy it as a share instead of what? Instead of buying for themselves, all that shenanigans. You've seen how we need to buy Bitcoin, register with the centralized exchange. It's a lot of process for some people, for the larger majority. So having a Bitcoin ETF is a simple way and a more safe way, regulated rather, way to acquire Bitcoin, and this will drive what? Will drive adoption. They're having a number 3, institutional adoption. Banks, hedge funds, and pension funds are now diversifying into crypto. So they are also holding, big banks are also holding what? Crypto. And this is also a catalyst for the Bullrun. Number 4, we have the pro-crypto regulations. For example, Trump's support in increasing confidence in lighter, by what? By enforcing lighter crypto laws. So this Trump is a pro-crypto, and this now is a Bullrun catalyst. Also, Paul Altkin, the new SEC chairman, I shared also that video, is also pro-crypto. And this means that the laws that will be around crypto itself will be what? Will be fair and lighter, and this will drive more adoption. Number 5, I won't repeat this. It's one of the main, or rather the main catalyst for Bullrun is the halving cycle. And you've done that, we've discussed that already. Number 6, weakening USD and the inflation hedge. So as the dollar struggles and inflation lingers, remember you said inflation is what? The purchasing power decreasing with time. So investors view Bitcoin as a digital gold. So as the dollar loses value, people are looking for safer assets. And this will land them where? Into cryptocurrencies, or rather the Bitcoin. So if $100 can't buy what it did last year, people move to Bitcoin as a store of value, because we said what? Bitcoin is deflationary. The purchasing power increases with time. Also, the altcoin season is heating up. Other cryptocurrencies, we said that an altcoin is any other coin that is not Bitcoin, are starting to go up in price following the success of Bitcoin and Ethereum. Remember we said Bitcoin is the king, Ethereum is the queen. So when Bitcoin goes up, the rest of the altcoins will follow suit. Then you are having global trends and economic changes. 2 major things are making the world more friendly to crypto. Number 1, less political tension. And this you've seen, if you follow me on Twitter, I do update on this. Then more young people are using crypto. The Gen Z and millennials are choosing crypto over traditional banking, especially in Africa, Latin America, and all that, because of the inflation that we're having. Then the last one is more people around the world are using crypto. So crypto adoption is growing quite a lot in places like Kenya, Nigeria, and all around the world. So people are using USDT for saving, buying a time, or doing freelance jobs. I actually saw someone who goes around, I'll share that link, who goes around introducing people like Mama Boga, small scale farmers, small scale business owners into accepting crypto into their businesses. And with that, we end this class of Bitcoin mining and Bitcoin halving. Any question before I close this up, this class? Any question? If everything is clear to that part, thumbs up. If you can comfortably explain to someone what Bitcoin halving is and the Bitcoin mining is, thumbs up. Only Thomas. Okay, perfect. If no question, then I'll end this class right here. We meet tomorrow for crypto fundamental analysis. Bye bye, guys. See you tomorrow.
Thank you so much.
Okay.